good to see you back here on Powerlunch. Well, investing in a case of vintage French fine wine can cost up to £20,000, while a bottle of Cheval Blanc will put you back nearly £7,000. As an asset class, fine wine has outperformed most equities and also commodities, posting a 52% gain over the past 12 months. So how can you invest in this lucrative sector if you want to? To discuss all this, let's get out to Chris Shillington. He's head of PR Cantor Spreadfair, and James Miles, director of Liv-ex.com. James, let me start you with it. Liv-ex is a very interesting index following these kind of fine wine investments. First of all, how do you actually track it? Second of all, tell me a little bit about the index and the way it performed.
Sure. I mean, the index tracks the 100 leading wines in the world, basically ranked by their scores from the leading critics, most principally Robert Parker, who is the sort of Standard & Poor's, if you like, of the wine world. And into that we also take into account just how liquid the particular commodity is, to excuse the pun. And as you say, I mean, it's been, over the last 12 months, we're up 52%. Basically, fine wine is a warrant on wealth creation, and over the last 3 or 4 years we've seen enormous amounts of wealth creation, not just in the US and Europe, but also in new markets for wine like India, China, the Middle East and Russia in particular. And that increased demand has driven prices higher.
So there is demand, there is fine wine. However, how can you actually trade a commodity that is as perishable? If you think, okay, I'm going to buy something, it cost me £10,000, maybe in 10 years it will be £19,000, but then it has another 10 or 15 years until you have to either drink it or just throw it away.
Absolutely. Well, that is the problem with wine. If you want to be involved in a Petrus or one of the Rothschilds or one of these great wines, you know, the normal man on the street can't go out there and buy cases. So what they have to look at is other ways they want to invest in this particular area where we've seen huge growth in the last 12 months. And as with in the sporting terms and financial terms, you've got to look at the way that is going to financially benefit you the most. With the 100 index, you can be involved in every wine, all top 100 wines in the world or thereabouts, and buy into that without actually having to purchase the wine itself, without having to unfortunately unbottle one of them. Also, the other way you can look at it is go into funds. They have wine funds, and another way which we've had demand on Spreadfair for is to go into the 100 index, and you can buy or sell it on a spread. So if you think that wine is going to perform particularly well over the next 6 months, you want to buy. And if you don't think it's going to perform, all the hype is maybe overhyped, then you can sell.
So what about the liquidity? We're just saying about that index. Can I just go in and buy one day and then, you know, is it a stock? What do you call it then? Well,
it's literally a case of 12 bottles is typically how it's traded. That's a unit. Quantities of 12 bottles. So yes, I mean, you can literally, if you want, you can ring up your wine merchant. You can hunt around for the best price. You can use the internet to track down what the best price is, and you can do the job yourself. So but one of the great advantages, I suppose, of dealing in a derivative of an index like the Liv-ex 100 is that you don't have the hassle of having to store the wines, and equally the dealing costs in fine wines can be quite high. I mean, often 15 to 20%. So dealing on a spread at 2 to 3% is also quite a nice advantage.
So how is it actually weighted? Which wines?
Well, we weight the wines on the basis of production. So it's a combination of price and the production of the wine. So the main weighting in the index is Bordeaux wines, largely because the Bordeaux region of France is still the preeminent region for fine wine, and they produce wine at very high quality and much larger quantity than really anywhere else in the world. So that remains the focal point if you're talking about the very best wines in the world.
Chris, let me ask you, I got the feeling reading through the research that French wines increasingly are those to invest in, and the New World wines are those to consume. Are we seeing more and more that the French are trying to carve out a niche?
Well, I think James touched on the point before that you can't buy history, you can't buy class, and the French have always been seen as the nation, you know, the originators, much with food, as the premier wine-producing nation in the world. And when the economies are very strong, we touched on Russia, the Far East, obviously also in the United States, they want to have the best, and they'll pay over the odds for it. So when you have the best out there, which the French are, people are prepared to pay over the odds for it. However good the Australians, the South Americans, even our good British wine or champagne is, people are not going to pay over the odds for it because it is of a lower class. You know, that's not being derogatory than the French, and that's why we've seen so far a huge upturn in the last year, certainly in the last sort of 6 months of the French wines, and particularly the Bordeaux, which James touched on before, which are ever so popular.
So James, very quickly, past 12 months up about 50%. What do you think for the next 12 months?
Well, I mean, currently we're having a little bit of a breather. The index has been a little bit flat for the last couple of months, and I think that's probably healthy. But frankly, outside of wine insiders or those people who've been following fine wine for a long time, very few people know that there's a bull market going on in fine wine. So I suspect that it still has some legs, some room to go. Okay, some room to go. Yeah. Not very specific, but at least positive. Thanks very much indeed, James Miles, joining us there from Liv-ex, and also a big thank you to Chris Shillington, head of PR, Cantor Spreadfair. Well, just to recap, Nokia's phone sales rose more than expected in the third quarter, but the world's top handset maker had to cut prices sharply to win market share, which hurt its profits and sent its shares down over 5% right after the figures. That's it for us and the trading day. Coming up here in the next edition of Power Lunch, Investors Clinic, I guess. See you tomorrow. Bye-bye.